And we're back. A little update. As you can see now, we've gone 10 pips into profit, and most importantly is we've now broken out of the channel and we are broken to the upside. So the probability of this trade now going higher has increased. Doesn't mean it will go on to win, but it has now increased, and so we'll come back and hopefully catch this trade just hitting our targets, hopefully. Just doing a bit of an update on this particular trade, and we rallied up to retest the highs as can be seen here. We failed to put in a new structure high. We put in a rejection candle followed by a lower low, lower close, and now we're back down at structure. So I have actually reduced down some of the risk here. I've moved my stop to 5 pips below the 163 flat. Now there's a reason why I've done all of this, and that is because on the daily time frame we're actually up in the wicks. Now the problem is, in fact, if you just recap here on the dailies, we're clearly bullish and have been for a long period of time. We are at the 163 even handled number, and we could go all the way to the tops of these wicks here at nearly 166, some 300 pips away. So it's very hard to determine where to place your secondary targets. So as a default, I played for the 127. Now, because we have failed to put in a new high and we're in the wicks on the dailies, you can see that we were clearly trending. Then what's happened now is I've reduced the risk, and now I've also reduced my targets. So instead of playing for the extension, because we've clearly held this level, I've now played for a retest of this high here, and I've kept my stops below this structure level here and 5 pips below the even handled number. Okay, so I hope you follow that. Again, we were overbought at 87 on the dailies. We were in the wicks. We were heavily trending though here on the 15 minutes. Certainly we had a bullish breakout pattern. We did not get the breakout to make a new structure high. So this is the first indication the market is running out of steam. We failed to put in that new high. Right now, this is risk management. I have reduced down the amount of risk, and I am now playing for a retest of the highs, no longer for the extension. So we'll come back now and see whether or not we actually end up going back up and hitting targets. If we do, I'll be very happy because I'll get out of the trade and take some pips with me. But most importantly for me now is I've reduced the risk, and I want to turn this trade into a winner and not have it as a loser by trying to get those fib extensions, that 127 fib. And here we are back on the Euro Aussie, and unfortunately now I have been stopped out. The final figure, because I did adjust stops, was minus 14 pips. This is a particularly good example for me of a trade where I could potentially have managed it better. We are in a heavy trend, but as mentioned, I'm pretty sure I've mentioned in the previous video that we were in the wicks on the dailies and we were massively overbought, and this could have been a trade where I only went for target ones due to the fact at any point we could turn. Obviously though, there's a big difference between the dailies and the 15-minute, and I mean, we almost got there. You know, another day we could have hit the 127 and I just wouldn't be having this conversation. I think this just goes to show for me that I need to be more relentless and more vigorous with my my plan to enter and exit a trade. Not only do I want it to adhere to my rules, but I also want strict entry rules, which I already have. I need a management rule to manage the trade, and I'm not just talking about, oh, I'll do this or do that. Actually have a physically written down plan, and lastly as well, a profit or loss plan. And in this situation, that involves looking at the high time frames, saying, well, you know, at some point we're going to turn here on the daily and see a relief due to the massive rally we've had and the overbought on the dailies. and if this is it, maybe I want to implement a slightly different strategy, and that strategy can be very simple. It can be I'm only going to go for one target, a retest of the highs, or it can be go for target ones here and hold for secondary targets, and at least that way then it allows me to bank some profit and move to break even, which is the really important thing, because here in this scenario, if I'd gone for target ones, now I would have banked 15 pips, and I would have been out of the trade for a win of 15 pips instead of being out for a loss of 14. And saving a loss is pretty much a win, or not taking a loss is pretty much a win, and in this situation that is certainly the case. So this is one of the videos for me I'm certainly going to highlight and look back on and say, yes, I could have done this better by implementing a better profit or stop strategy based on this particular situation. So I'm actually glad it lost, because it will now make me go back and make adjustments for this particular type of trade, and again, obviously if we just rallied up there and hit the 127 targets, I wouldn't be in this position. So I'm glad I'm in it now, so that I will not make this mistake in the future.